Uh, Good afternoon. I'm Hari Krishna. Uh, Let me first read the disclaimer. The session is solely for educational purposes. The securities displayed, if any, are for illustration only and are not recommendatory. We do not bear any responsibility for any trading profit or loss you might incur as a result of using this learning content, data, indicators, or charting platform. We are not advising any trading or investment ideas. Before taking any trading investment decisions, consult your financial advisor. Thank you. So today we progress from where we left in the last class. Okay. So in the last class, we discussed about the support and resistance and the trend lines. Now today we will discuss about the breakout, because we what did we studied yesterday? When we are looking at a chart, either I can buy when the stock is near its support. So the stock is near this joint support. See, so almost stock is near this joint region, or there we can buy due to that, or we can buy when the stock is actually breaking out like it had done last time, right? About the previous swing high. So when a stock is breaking out about the previous swing high, so breakout trades, we should first look at the previous two candles. When we are breaking out, the stock is breaking out this level. Now, first it is important to mark this level, which is the previous swing high. Now, when the stock is breaking out, you will see the previous two candles. This is called the two candle theory. So this is the candle in which the price is breaking out. Now, when price will be breaking out, I will look at two previous candles. Which are the two previous candles? One is this one. Let me have a different color so that it is easy to recognize. One is this one, and another is this one. Now see, we will define different kind of candles in a different. A candle like this, where the body is more than 50% of the candle length. So in this candle, the body itself is more than 50% of the entire height of the candle. These are called conviction candles. Conviction candles shows that there is no ambiguity in price action. Please see, there is no ambiguity in the price action in conviction candle, where if I look at the candle itself, this is the candle length. Out of this candle length, which is 50 rupees, the body length, that means open to close, will be more than 50% of the candle length. These are called conviction candles. Compared to this, candles like these, okay, are confusion candle. Here, the body is less than 50% of the candle length. So conviction candle is a candle where the body length is more than 50% of the candle length, and confusion candle is a candle. Confusion candle is a candle where the body length is less than 50% of the candle. Now, first, when we are breaking out, we will try to identify what is the type of two previous candles. This one is very easily visible. This one is very easily visible as conviction candle. This one, the next one, we have to check the total candle length is 23 rupees 30 paisa, and in this candle the open was 550 and close was 561.80. So it is, to be exact, the candle length is 24 rupees 25 paisa. Okay. Low to high is 24 rupees. So here you get the low to high. The low is 549.55 and high is 573.05. Right. So it is again 549, high is 573.05. So it is totally 23 rupees 50 paisa. 23 rupees 50 paisa. Out of that, the body is open to close. The body is 11 rupees almost, less than 11 rupees. So it is a confusion candle, basically. So the second candle is a confusion candle. The first candle is a conviction candle. This is a conviction candle. Why? Because this candle, the body is more than 50%. The body is more than 50% of the candle. This is a confusion candle. Why? Body is less than 50%. When we have before the breakout candle, which is the breakout candle, this is the candle in which breakout is happening. When we have a situation like this, that at one or both of the two previous candles are confusion candle, one or both of them are confusion candle. Here one is there. So when one is confusion candle, we won't directly enter after breakout. What we will do, if we are looking at a daily chart, if one of them is confusion candle before breakout, what we will do, we will go to a shorter time frame of 75 minutes. Why 75 minutes? Because if we go to the hourly time frame, every day you will have in hourly 7 candles. The last candle is a 15-minute candle because price trades for 375 minutes. So 6 into 6, 360, and the last candle is a 15-minute candle. So avoid this last candle being anomaly, we have taken the 75-minute candle. So basically, because one of the previous two candles is confusion candle, I am going to a 75-minute candle, and the date is 31st Jan 2025. Okay, so I am going to 31st Jan 2025. So I will go to 75-minute candle and I will go to date 31st Jan 2025. Okay, this is Jan, this is 31st Jan 2025, right? So because we have gone to a 75-minute candle, we will see that this 75-minute time frame candle closes above the breakout line. This 75-minute candle closes above this breakout line. So at this point, I will buy. Had it just gone up and not closed above this, we wouldn't have entered. If it had gone but come down later, we wouldn't have entered. So we enter only because there is a close above this important point in 75-minute time frame. And why do we go to 75-minute time frame? We went to 75-minute time frame only because the one of the previous candles were confusion candle. This was the confusion candle. Now let us look at other kind of breakout also, where both of the previous two candles are conviction candle, right? So like this, look at this. Here also the previous candles are conviction candle. Let me find a situation where two previous candles are conviction candle. Look at this, very beautiful. Here, what are the two previous candles? This one and this one. So here, the two previous candles have very large bodies and small wicks. So both the previous two candles, I can see a lot of people entering right now. Because when I started the class, for first 5 minutes, 6 minutes, there were only 25. Now, I can see there is 34. So the batch strength has gone up almost 40%. Now, what I have spoken over this last 15 minutes, first 10 minutes, there were only, not 5 minutes, only 29 people. Now, those who have entered now, please understand, you have missed all the things that have been discussed in the last 14 minutes or 13 minutes. And it is not possible for me and those who have joined in time to wait for 15 minutes before others will arrive at 14, 15 minutes late and then start the lecture. This lecture will start and it is not possible to repeat because someone has joined the late. Because every concept that I'm discussing with multiple examples and with a lot of explanation. So if you are joining late, you are joining at your own cost, right? So next time, please try to join at correct time and not join so this much late. Because everybody's time has value. I have to value those who have joined in time, right? You may have your own reasons, some problem at home, fine. But then you also accept that you will have to go through the recordings to realize. Anyways, coming back to the point, there are two candles, both are conviction candle. Why? Because the body length is more than 50% of the candle. So here we don't need to go to a lower time. What we need to do is that after the price breaks out and still after 5 minutes, if price stays above this, we will directly enter. We won't wait for a 75-minute candle to close above this. Because both the two previous candles are conviction candle, there is no ambiguity. Let us see another example. Okay. Look at this breakout. Axis Bank. Now what? This is the breakout candle. Now what are the two candles before breakout? This one, surely a conviction candle. Now the next one, surely a confusion candle, because the body is less than 50% of the candle. So what I need to do? I need to go to a lower time frame of 75 minutes, right? And once it closes above, then only I need to buy. That we bought and we got the result, right? Let me show the result of Eicher Motor. Right? Eicher Motor had a small consolidation, right? Now, what are the two candles before breaking out? these two candles, this is surely a conviction candle, though black does not matter, but this we have to check because these have larger wick. In this candle, the low is 868, the high is 935. So the difference is high to low, the difference is 70, high to low, the difference is 66 rupees 50 paisa. I'm calculating by looking at here. So the difference between high and low is 66 rupees 50 paisa. And open to close, the difference is open to close, the difference is 30 rupees. Open to close, the difference is 30 rupees only. And the entire candle is 66. So it is less than 50%. So it is a confusion candle. How do I enter? Very simple. I will again go to a 75-minute candle. See, in this particular candle, it went up, but it not close above it. We don't enter. Here, only after the 75-minute candle closes, I enter. Now, why I am doing all these things? Looking at taking so much pain. I am doing so much pain so that to avoid false breakout and false breakdowns. There are many a times in the market we encounter false breakout, false breakdown. See, this was basically a false breakout. This was basically a false breakout because yesterday what Trump has done, possibly these will open gap down and go down. Now, how could I avoid false breakout? But my strategy. See, what do I see here? The two previous candle, this one and this one. Now, the first candle itself is a confusion candle. So I would wait for a 75-minute candle to close above this. Very bad luck. See, here a 75-minute candle had closed. We should have entered, but now we will face the false breakout. Could not avoid in this case also because a 75-minute candle had closed above this. Okay. In many cases, we will possibly be avoiding, but in this case, we would not. This applies in the case of breakdown also. It is not only about breakout. Let me show. The same principle that I am talking about applies for breakdown also. Now, what is the critical level? This is the critical level. Now, the candle before breakdown, this is the breakdown candle, first candle, which is coming down. Now, please understand, this is a conviction candle. Color does not matter. Here, both are black, but color does not matter. Both are conviction candle. So, in this candle, when price is going below this, the moment there is a breakdown after 5 minutes, I enter. So I entered here around this level. Okay? And see, eventually the break we had. So this is about how to tackle breakout and breakdown. And also, you know my general formula. We will go for upside breakout when Nifty 500 is above 20 and 50-day exponential moving up. Buy side breakout when Nifty 500 is above both 20 and 50-day exponential moving average. Right? So I am not going to look at individual stocks. I am not going to look at individual stocks for this moving average checkup. I am not going to individual stocks for this moving average checkup. So if Eicher Motor is breaking out, I am not checking if Eicher Motor is above Nifty 500 or not. Sorry, Eicher Motor is above 20 and 50-day. We are not checking that. If we are going to take upside breakout, for that we are checking only the Nifty 500. What are exponential moving average? We will discuss in the 2-3 classes later. Okay. For now, please understand these are two moving average. Remember this, and we will check if Nifty 500 is above 20 and 50-day exponential moving average. If Nifty 500 is above this moving average, then only we will go for upside breakout. Similarly, if Nifty 500 is below 20 and 50-day moving average, like we were having between February to March, only then we will go for downside breakdowns. When it is below this, if some other stock is showing upside breakout, we won't try to play because we will try to play in the broader direction of the market. We will try to play in the broader direction of the market. Obviously, there would be some stocks which were moving up. But because overall the market was going down, we will only play in the downward direction when Nifty 500 is below these two. And when Nifty 500 is above these two, we will look at upside trades. Okay? Overall market ke direction ke against, if a stock is moving, more than often it is a failed breakout. So we try to cover it. As simple as this. So here we have clearly demonstrated the concept of breakout. Now, This part is clear. Now, what is important? We will learn about stop loss and target setting. See, the number is 37 now. So when first 10 minutes, people were only 25 people were there or 26. So the batch strength has gone up 50% and it is 13:55. So 25 minutes late. So all those concepts that have been discussed, they have missed. They have to refer to the recording because we cannot repeat all the items that have been covered for last 25 minutes. And obviously, if the future discussion, it is dependent on the previous 25 minutes. If some of you have missed, obviously, people will understand I did not understand. To understand, you have to see the recording, everyone. But please try to join in time. Please try to value the time of every individual. ठीक है ना कि ये जो इतना लेट आप ज्वाइन कर रहे हो, दिस इज नॉट एट ऑल. मतलब in school, if you were trying to go to school 25 minutes later in a class, would you be allowed to enter? See, when I joined MBA, I was 24, 25. ठीक है ना? I was one of the most elderly person in my batch because there were many young people of 21, 22. मतलब there were 30-year age people also in the batch, but I would say, in the top 30% in age bracket with 24 when I joined my MBA. ठीक है, क्योंकि इंडिया में क्या होता है ना, लोग तुरंत ज्वाइन कर देते जाते हैं. और also I have had a couple of years of break after my 12th because I wanted to go to IIT. IIT मिला भी था, लेकिन क्या हुआ था कि पापा के हेल्थ खराब था तो मैं जा नहीं पाया. So that's why instead of passing out at 22, I passed out at 24. Then I went to MBA. But मेरे जो वहां पे ना लोग 21-22 साल के भी थे और 30 years के भी थे. And MDI गुड़गांव, you know, it is one of the top 10 B schools in India. उस समय तो रैंकिंग टॉप 5-6 में आती थी. ठीक है. There were people who skipped some of the lower IIMs like IIM Shillong and these things and joined us. Anyways, उधर 5 मिनट भी आप क्लास में लेट आओ, you were not allowed. People who were age 30, 32, 35 के भी लोग थे हमारे बैच. They were not allowed at their seniority. They were 5 minutes late into the class. Here you are joining 25 minutes late. मतलब unthinkable. And MBA से निकल के ना मोटा मोटी सबको जॉब लग जाती है. Here you are entering a profession where success rate is 10%. Only 10% people make money in the market. MBA से निकल के मोटा मोटी सबको जॉब लग जाती है. There, that kind of seriousness is there. And here, where the success rate is 10%, people are joining casually after 20-25 minutes. I don't know what to say. It is up to you how you take it. But to succeed in market, like in everything, you will require good amount of discipline. ठीक है ना? And timing, punctuality is a very significant part of the discipline. बाकी आगे आपकी श्रद्धा है. All are grown up adults. I hope you take it in a positive sense कि क्लास कब ज्वाइन करना है, नहीं करना. Fine. Now the point is stop loss. ठीक है. Now what is the, how do we place the stop loss? Now you have to understand a company or stock goes through different kind of phase where the company is moving very fast. For example, if I'm talking about a phase like this, again I need to change the color because it's coming at me. So how to change the color? Just a second. Change the colors. Brush. Anyways, you are able to understand. Now, in this phase, the volatility is very high. And in this phase, volatility is very low. So the same percentage point stop loss cannot be applied to these two phases, right? For example, a stock which is moving in this phase, the volatility is very high. And here the volatility is very low. So same stop loss do not apply to same in this phase. It has to be based on the current volatility of the stock. Now, for example, I want to buy this stock of Hero MotoCorp. Okay? And I want to buy the stock here because it has pulled back to my support. I want to buy the stock here, right? So in every trade, I have a stop loss and target. Now, how to find stop loss and target? That we will derive from ATR. ATR is average true range. Now see, when the stock moves very fast, average true range goes up. When the stock falls, when the volatility is low, the average true range is lower. So your stop loss and target setting will be based on this average true range. Now, what is average true range? First of all, what is true range? Let us understand what true range is. Now, if I ask you for a candle like this, that what is the base candle? What is the range of the stock? You will say this is the range of the stock. But this is not the true range of the stock. What is true range of the stock? The true range of the stock is previous day close. This was previous day close to this high. So true range is, why true range? Because if you had held a long or short position, this would have been the impact on you. This would have been the impact on you. See, one more person joined right now, which is 1402. So missed all the things that have been discussed. So this is the true range. Previous day close, next day extreme point. This is the true range. If you are holding long or short in this stock, what is impacting you is this huge range. This huge range. Boss, this huge range is impacting you, which is very, very, very big. Fine. So what do you do? For setting a stop loss, you take average of last 5 days true range. This is last 5 days true range. The average is, you can use SMA, you can use EMA, you can use WMA, various kind of moving average, all almost reveal across the same value. RMA is their default setting. I have not changed, and I have been using RMA only. I don't change. So last 5 candles, which are the last 5 candles? So if I buy the stock here, because it has come to my support. So if I buy the stock here, I will look at RMA of the previous candle. Why previous candle? Because this candle is not closed. I don't know what will be the, one more person joined here at 204 after 35 minutes. Fine. Now, this is my point. This candle is not closed. So this is the close. Now, last 5 days true range average I have to take for volatility. So I will go for the previous candle's ATR. How do I get that? If I put a cursor on the previous candle, this point, I will get the ATR value here. See, ATR value here, which is coming at 136.87, which is coming as 136.87. Now I have a stop loss sheet, and Payal has already shared all these documents with you. So you don't need to ask to me कि सर ये कैसे मिलेगा, ये कैसे मिलेगा. ये नहीं मिलेगा क्योंकि ये already मिला हुआ है. So for example, if I need to buy this stock, what is the stock name? Hero MotoCorp. So YOLO thing you have to, Hero MotoCorp, what is the date? Everything YOLO you have to enter manually. Okay. Date is 29 August 2025. 29 August 2025. Okay. This is Hero MotoCorp. We are buying here. Previous candle ATR. Previous candle, at what price we are entering? Suppose we are entering at this price, which is 5060. Which is 5060. Right? What is the previous candle ATR? Previous candle ATR is this. Previous candle ATR is this, which is 136.87, which is 136.87. Okay? Previous candles ATR I am taking into account. 136.87. See? Now, what I have seen, and I will show you, in any stock, there are natural pullbacks. See? A move, natural pullback, move, natural pullback, move, natural pullback, move, natural pullback. Every stock, irrespective of the stock, even if it is going up, there are natural pullback, right? This natural pullback, what I have observed, is generally less than 1 ATR. Generally, this natural pullback is 1 ATR. So when I am putting my stop loss, my goal is that if I am buying a stock, I don't get out in this natural pullbacks. समझ रहे हो ना? Obviously, if there is a breakdown, I definitely want, I am buying a stock. If there is a breakdown, I exit. But in this natural pullback, I don't exit. That is my goal, because it is not possible that I buy a stock and from that price it will go up. Okay. It is not possible. It is never possible that I buy a stock and it start going up from that very beginning. There will be natural pullback. So my stop loss should be deep enough to assimilate that natural pullback. What I have seen, natural pullback is less than 1 ATR. I keep my stop loss 1.2 times of this. See, these are formulas. Here I have to manually enter this. My entry price, the previous day ATR. My stop loss is 1.2 times my first target. My first target is 2.4 times of that. This is this one. So my actual stop loss is my buying price minus, ये तो गलत है, my buying price minus 1.2 ATR. This is my stop loss, and my target is my buying price plus this. Very clear? Let me show an example of a selling opportunity. ठीक है, ये Alchem का ही ले लेते हैं. ठीक है, Alchem was, and when I am selling, I will be selling in futures. So Alchem futures, right? ये ले लिया मैंने. Alchem futures is breaking down, right? We are right now only learning about my stop loss and target setting. Alchem future, it is breaking down. Suppose we short at 5400, 5380. Suppose we short at. So sell Alchem futures. ठीक है. What is the date? 9 January 2025. 9 January 2025. What is the price? 5380. This is also 5380. Perfect. This is 5380. Previous day ATR. I am shorting on this particular date. So previous day is this. ATR is 119.63. So ATR is 119.63. So my actual stop loss is 1.2 times of this. Target is double of this. So my actual stop loss is this plus this, because I am selling. So I am selling here, my stop loss should be higher. So my actual stop loss is 5523.6. I have shorted at 5380. I have shorted at 5380. My stop loss is 5523.6. 5523.6. My target is 5092.9. My target is 5092.9. So this is my stop loss, this is my target, double of that. My stop loss is this, my target is this. अच्छा, let me come back to a newer example. कौन सा? चलो Laurus Lab ले लेते हैं. Laurus Laboratories. Fine. So suppose I am getting into Laurus Laboratories when it is breaking out. Right. Let us understand the gravity of the situation. Copy किया, पेस्ट किया. ठीक है. Stock name क्या? Laurus Labs. Fine. What is the entry price? Suppose it is 682.1. What was previous day ATR? Previous day ATR. This was the breakout entry. Now previous day ATR is 15.57. 15.57. Fine. I already need to change the date. My date is 26 June 2025. 26 June 2025. So my stop loss is 663.3. This is my stop loss. My target is 719.4. 719.4. Fine. Very good trade. It reached my target. But if I look at this stock, I feel sad. It immediately went up so much. Why did I sell here? Why did I sell here? In the hindsight, it looks very, very, very foolish decision. In the hindsight, it looks very, very, very foolish decision. So, kaise kare? What I do, and I teach this to all my students, is I will book 50% my stop loss, 50% of my quantity here. What is the quantity that I need to trade? Your question that is in your mind is, what is the quantity that I need to trade? Those things we will learn in our risk and money management session. That is not the point we are discussing right now. The point that I am discussing, whatever quantity I have taken based on my capital, I will book 50% here. And the remaining I will let run with the trailing stop loss. And trailing stop loss every day I have to keep in the morning. See, this stop loss is, first stop loss is on hit basis. The first stop loss is on hit basis. I buy the stock, the price is hit, I will exit. I won't wait for the close below this line. क्या पता क्लोज तक और 5% गिर जाए, हो सकता है ना. फॉर एग्जाम्पल, वी गेव अ ट्रेड ऑन पेटीएम वेरी रिसेंटली. अब क्या हुआ देखो, पेटीएम, व्हाई डिड वी बाय पेटीएम? वी बॉट हियर बिकॉज इट वाज नियर द सपोर्ट, एंड पेटीएम hit our stop loss, and I gave this trade to my students. And why I am showing this? To make you understand 100% of trade cannot succeed. तो पेटीएम मैंने दिया यहाँ पे, और यस पेटीएम का स्टॉप लॉस मान लो यहाँ पे था. अब पेटीएम लोग पूछ रहे थे, मतलब इवन इफ यू टीच 100 times, people will still ask, sir, should we wait for close? Should we wait for close? Why? The stock after breaching 1187 had gone to 1165. Who knows? It could have gone to 1120. Why wait for the close? First stop loss is always hit basis. The moment this price comes, I exit. क्या पता उसके बाद कितना गिरे, हो सकता है ना. So I don't wait for the close. So first stop loss is on hit basis. The moment it starts, I will exit. Second, first target is also hit basis. This level is reached and I exit from the stop. Now, boss. Now. Now, boss. Once this level is reached, I will book 50%, and everything I had manually entered here. This is my target. Now what I do? See, I am introducing an indicator. You will learn about this indicator going forward. So you will learn right now, just understand the use of it. This is this one, super trend, and the name is Kivan Ozbilzik. This one you have to use super trend, right? And the setting that I used is chart ATR period 10, source high low by 2, ATR multiplier 2.1. You don't need to go into the nitty gritties. The only thing is that some people, if I use instead of 2, suppose I use 4.1, the super trend will move away from the price. See, super trend has moved away from the price. If I make it to 1.5, it will come closer to the price. What I have through my experience of many years of using this, started using is 2.1. The first stop loss is on hit basis. Next stop loss is on price closing below this. And if I have this stop, what I would do, I would not put stop loss every day, not required. Because my first target is hit, next stop loss is close basis. Means I will put a alert that boss, price closing, price is less than super trend. So if I have given an alert, price less than super trend, the day price goes below super trend, it will give me alert. That day I have to observe. If price is closing below the super trend, I am exiting. See, I am exiting here when price is closing below the super trend. So for my first stop loss of 20 rupees, 19 rupees, I am getting 40 rupees. But for the remaining, I am getting 120 rupees more or 115 rupees more. So first one is 1:2. The next one is 1:8. See, my 682 to 634, how much? 150 rupees, stop loss is 20. So 7:1. First, why I am getting 1:2? The other one is 1:8. So what I am doing, again, listen. First 50% I am booking here. For the remaining 50%, I am putting this as a trailing stop loss and putting an alert here that price is closing, price is less than super trend, creating an alert. So when price will go any day, price cross इसके नीचे जिस दिन आ जाएगा, I would have got an alert this day also. I have observed, but price eventually closed above this, so I did not need to exit. Next day, I would get an alert, and by the end of the day, price is closing below this, so I am exiting. So in this method, by part booking and trailing, I am able to gain a huge chunk when it is running in my favor. Right now, the next important point, TVS Motor. This is the last point in this thing of stop loss and target setting. Simply समझो कौन सा चार्ट से I will be able to explain. Let me check. TVS Motor का चार्ट है. I have taken entry here. My first target is somewhere here. That is achieved. But the stock is keeping on going up and up. So should I sit quietly with the only, suppose I have about 100 shares, 50 I have booked. But ये stock तो ऊपर जा ही रहा है, मैं क्या करूं? I shouldn't take any entry. No. Now I am talking to you the concept of pyramiding. Pyramid, how does it build? First there is a base, then there is another layer, then there is another layer here. I bought 100 shares here. I booked 50 here, so 50 is continuing till this point. until price closes. But in between, if price is breaking out, here there is a breakout. I am buying another 100. I bought 100 here, 50. I am booking 50 continuing. I bought another 100. For these 100, this is my stop loss. This is my target. So basically, that 50 that is carried forward, the stop loss as this. For the fresh buy, this is target, this is stop loss. Now I am booking 50 of this purchased here, but the remaining, the 50 of my first buy and 50 of my second buy, both are continuing. Possibly there is a third breakout. I am entering here also with the stop loss of this and target of this. But here it is failing. Here it is hitting my stop loss immediately. Which stop loss? That 100 I bought here, not the 100 that I am carrying forward. That 100 is once there is a close below this, I exit from here. Again repeating. I buy 100 here, book 50 here, 50 carry forward. I buy 100 here, book 50 here. So 50 bought here and 50 bought here, carried forward. These are getting carried forward. Another breakout, I buy 100 here. There 100 is getting stop loss here. And the carried forward 50 plus 50 is getting exited here. This is the concept of pyramiding. So we learned the most important concept in trading today. First, we learned about confusion candle, conviction candle, when to apply them. Okay? If one of the two previous candles are confusion candle, we go to a lower time frame. If both are conviction candle, in breakout or breakdown, in both the cases, we go with the immediately with next 5 minutes. Then we learned about ATR based stop loss. 1.2 ATR is stop loss and 2.4 ATR is our first 50% booking. And then following with the trailing stop loss of 2. This is the, again, I'm showing the, I'm basically summarizing the things that I taught. So I am basically following with the 2.1. If you want, if you are a little bit extra time, you can do it at 2.2 also. It will increase your stop loss a little bit. You can use this also. So this I can use the trailing stop loss. Then we learn the concept of pyramiding. So this part is already done. I hope you understood how methodically, not just based on whims and fancy, we should put our stop loss and target, and when we should go for upside breakout trade when Nifty 500 is above. Nifty 500 is above 20 and 50-day exponential moving average. When should we go downside breakdown trades? When Nifty 500 is below both of them. I hope you understood all the points. Like to have a feedback. Did you enjoy the part that we had gone through this much, this far? Did you clearly understood all the points? Did you understand? Sorry, did you understand? Very clearly, with a lot of examples I have explained. With a lot of examples. In every case, I have repeated twice, thrice every concept, and with lot of examples I have described. Now, the next concept that we will study is classical chart patterns. Okay, so we will have the, see, it is not recommended. I am showing you what I use. There is no, it is not something written on stone few thousand years ago. I am showing you what I follow. If you want to follow it, fine. If you want to modify it a little bit, that is also fine. Sunil Gupta ji is asking, it is always recommended. This is the method I follow. If you want to modify it, if you want to book 30% at target, try to use it. If you are successful, fine. Right? So I am showing what I use. These are not something written on some stones 5,000, 10,000 years back. Okay? It is applicable in all kind of trading. It is applicable in all time frames, everything, right? And if you want to modify it, that is also. These are not scriptures written on stone 10,000, 20,000 years back. These are rules I follow. You want to see, every batsman bats in a different way. The same coach had taught how to bat to Praveen Amre, Sachin Tendulkar, Vinod Kambli. 3 played test cricket, 3 batted in a different way. Everybody can tweak their techniques in different way. It is not, be very purist, the only way teacher is teaching. Ramakanta Achrekar taught cricket to Sachin, Praveen Amre, and Vinod Kambli. All played test cricket, all played for India, but they batted differently. How you do it? Well, obviously, you can modify the way you want to use it. Okay, fine. So we will have a small 5-minute break. We will start at again at 14:36, and we will start with the classical chart. Thank you. Now, before going to the next topic, and this part will be, we will learn only 2-3 patterns today, because the remaining patterns we will learn in the very next class. This is the classical chart pattern. Now, think about what is classical chart pattern. See, in chart, there will be areas which are forming certain pattern. Like Mazagao, you can see kind of a round shaped consolidation, which is called rounding bottom. Okay. We will learn this in the next class, because we want to complete the classical chart pattern. Today's class, this on. Now, see, this area is like an area of consolidation. You can see how big this area is. Now, when you look at volume, the volume is generally low during the patterns. During the up move, the volume was high. Volume is low. Once there is a breakout, again volumes come. But don't get fooled by looking at the low volume. See, low volume is happening over this huge amount of time. ये जो low volume इतना दिन से हो रहा है. Lot of people are buying, selling, buying, selling, buying, selling, buying, selling. A position get built over a period of time. Now, this is like a spring. This is like a lot of emotions that got built in this area of price action. The moment price breaks out of this, those who have bought are elated. Oh my God, my stock is going up. Many people who were not buying, they will see, "Arey, stock nikal gaya. The stock is running out." They will come and try to buy here. But those who have shorted, they are feeling scared. Oh, the stock is going away. I will make so much loss. The panic. So new buying, euphoria, and panic of people who have sold. And those who have bought and seen price going over, they have also exited. They are saying, "Arey, I had bought here. It had gone up, but little bit. But see, if I had held on to the stock, I would have got this up move." So a lot of people, those who have exited after up move, those who want to do a fresh entry, those who have shorted, everyone's gets here. Lot of emotion, volume increases. So it is like a spring. You have seen a spring, you squeeze a spring, and though the volume is low, but it is over a period of time. So a lot of people position get. So it is a condensed emotion, condensed price action, and when there is a breakout, often there is a decisive movement. Not always. 50-60% of time we will have this. And remember, we will study candlestick patterns also. Candlestick pattern appear at the fag end of the move. At the fag end of the move. Classical chart pattern boss happens after quite a substantial part of the move has already happened. Quite a substantial part of the move has already happened. Then only classical chart pattern. So you will never generally see that bullish engulfing pattern, which we will learn later, and a rounding bottom breakout at the same time. बहुत लोग पूछते हैं, सर, why should I follow candlestick pattern or classical chart pattern? We would follow both, because both do not appear at the same point of time, boss. Fine. So let us start with the first set of patterns. Okay. Okay, one more important point. I have seen a pattern. Let me go to the previous pattern. If I enter, the ideal stop loss is the previous swing low. And this is a big stop loss, boss. 11%. How many of you are happy having an 11% stop loss and then 20% target? It is not possible in day-to-day trading. So what do we do? Simple. We enter in the breakout. My stop loss is 1.2 R, 2 ATR. I book 50% at 2.4 ATR and run with the super trend as a trailing stop loss. So we will look at chart patterns. But when we trade, we will, this is a flag pattern. We will learn about the flag pattern in the next class. This is the last pattern that we will discuss. We enter here. We don't put a big stop loss. We put 1.2 ATR stop loss, 2.4 ATR target, and then we trail. As simple as this. Fine. So let us start with the pattern that is there. They go first 2-3 patterns we will study, and then we will leave the remaining for the next class. This is a double bottom pattern. Typically, two bottoms are created almost at similar level. Two bottoms created almost at similar level. In daily chart, 1-2% difference is okay. If you are looking at hourly chart, maybe 0.5% difference is okay. Right? So because exact same level bottom, it is very difficult to have. And the neckline is through the pullback point, you draw a horizontal line. Ideal target, this depth projected on the upward. But we don't get ideal target most often. So this is double bottom. Double top is similar. Two tops almost at similar level. And on pullback, this is the neckline. It has to be horizontal. Below this, 1.2 ATR stop loss, 2.4 ATR target. Ideal target is the height of the pattern here. Now let me show you a very recent example in Nifty. Nifty futures, let me show. So Nifty had a W pattern. ठीक है ना, और मैं क्यों बोलता हूँ लोगों को, बार बार बोलता हूँ कि भाई 50% बुक करो. देखो, tomorrow there will be gap down possibly in India market. Why there will be gap down? Because Lord Trump has put a very punitive bill on Indian IT sector. ये जब तक है ना, हमारे मार्केट को कभी शांति से जीने नहीं देगा. आई एम टेलिंग यू. हाँ, मतलब इतना बड़ा न्यूज है ही नहीं. देखो, this one, Donald Trump kills H1B visa program. Companies ask visa holder outside US. ये क्या बोला है? It is more important. Companies ask H1B visa holders outside US to return within 24 hours. 24 hours. Mr. Lutanic, $1 lakh fees for the visa. The employees are on an average paid by $1,20,000, $1,30,000. And if you every year on a renewal you have $1 lakh, most people will be asked to leave USA because no company will pay visa renewal fees of $1 lakh and keep them in USA. So Indian market possibly will fall. That's why I always see K book 50%. देखो, this was also a double bottom. ठीक है, price broke out. Did it go to the actual target? Actual target should have been this much. Almost गया था. But we don't behave this way. It has gone up 2.4 ATR and the ideal stop loss should have been this. So should we have kept 800, 900 point Nifty stop loss? No practical trader will agree to you. So 1.2 ATR stop loss, 2.4 ATR target, book 50% and trail remaining with the trailing stop loss. Right? And similarly, there will be triple top and triple bottom. There will be multiple bottom actually. Multiple bottoms at similar level, multiple tops at similar level. The same way it is traded, 1.2 ATR stop loss and 2.4 ATR target. SRF देख लो. SRF का chart. You can say na, multiple bottoms at the same level, 1, 2, 3, 4, 5. Once it breaks out, you enter. Again, it gives you opportunity. You enter. Again, it gives you opportunity. Enter. Again, it will come to 2,700. We will buy again, and possibly we will make money this time also. This can be also a buying opportunity. From here, it went up. Here it went up. So even if drop to 2837, we will buy with the stop loss. Stop loss get hit. No matter, we will again try to buy it. This is the beauty of horizontal lines. Now, there is not many softwares globally who give you this kind of auto identification of chart patterns. Those who provide, out of them, we are, the stockage is the first one to establish, and now few have started copying us. So the first one to establish this kind of thing. So if you go to categories, you will find double top, double bottom. So double bottom, it will show you stocks recent. You can go to the past stocks also. It will identify stocks for you, and then you have to find that there is a double bottom. You have to draw a line through the neckline like this, and once it breaks out, you have to take the trade with 1.2 ATR stop loss. So you will find multiple examples: double top, double bottom, triple top, triple bottom. You'll find example here. For next 1 week, your task will be to identify these patterns manually, not through this, and post in your respective group, tagging your analyst, asking questions. Okay, bhai, sir, I have identified this pattern, if this pattern is correct or not. Fine. So now till this point, we will complete it. Next, we will start with head and shoulder, top and bottom in the next class, and we will complete the remaining part. So now, those who don't have any questions, thank you for joining. You can leave right now. Enjoy your weekend. Those who have questions, please stay back and please raise your hands for voice question. So Abhijit Jain has raised his hand. Please speak up. But before that, I would ask, at what time did you join?
Sir, I joined at exactly 1:25. I had logged in, and when the webinar started, so I was online at that time only.
Fine. Please now go ahead.
Ji, sir. Sir, you were showing the example that we plot 20/50 EMA on Nifty 500, and if we see a bullish crossover, only then we start looking at the stocks.
I did not talk about bullish crossover.
Sir, you were talking something like 20/50 EMA, if I'm not wrong.
If Nifty 500 is above 20 and 50 EMA, then only if there is a breakout on the bullish side, we will play. That's what I said.
Okay, so that means 2050 EMA के ऊपर है कि नहीं, that we only have to see on Nifty 500.
Hello?
And hello.
Hello, there was an aeroplane going. Sorry, I could not hear you.
So I was saying, so we only have to see 2050 EMA only in case of Nifty 500, and then
Right.
we have to look at the stocks, right?
Yes.
Okay, so that means we don't have to see 2050 on stocks. Earlier,
I told this in the while teaching. Yes, right.
Okay, okay, fine, sir. Thank you so much. That was the only doubt. Thank you so much, sir.
Okay, thank you. Next is Ritika Jain, ma'am. Yes. Please speak up, ma'am.
Sir, what should be the ideal stop loss percentage in case we have to see the stop loss?
Ideal stop loss is 1.2 ATR.
Sir, if we want to see in like percentage, like 5% or 6%, how much on an ideal framework we should check?
No, we are 5%, 6%. We do not see that way. If the stock was 30%, why should I take 5%, 6%? It is not like that. That is why
Okay.
I explained. My stop loss is based on the volatility, 1.2 ATR, which is generally 3 to 4%. So target is generally double of that, which is 7 to 8%.
Okay, sir. Okay, sir.
Thank you. Next is Vishal Nigamji. Yes.
So Sharadeep, in case of commodity market, if I'm doing intraday, whether the stop loss can be applicable on the basis of this ATR?
Commodity market, the time frame will be different. For gold,
Your
it
voice is very
daily.
low. Your voice is very low.
I am saying the commodity market, the time frame I have defined. For gold, it is hourly. For crude oil, it is 15 minutes. For natural gas, it is 15 minutes. For silver and zinc, it is hourly. Fine. For Nifty Nifty futures and Bank Nifty futures, it is 5 minutes. So for all of them, I will use 1.2 ATR of respective time frame of respective instrument.
So if I'm doing it suppose today, so I have to
Hello,
consider
your voice is not audible.
Hello, am I audible?
Yeah. Yeah.
So if I'm doing the trading today, so I have to consider last 1
Your
hour.
voice is not audible, sir. Your voice is not audible. Your voice is very low. You have to raise your voice. Otherwise, I won't be
Hello,
able to.
am I audible?
You have to raise
Am I
your
audible?
voice a little bit. Yes.
There is some problem, I believe. I'm at my top of my voice here. Hello.
Okay. Question?
Question is ki, if I'm doing it today, so I have to consider 1 hour back ATR, or I have to consider 1 hour back candle, or I have to consider it last day's candle. That's what my question is.
No. You 1 hour back candle.
So suppose if I'm entering in the market around say 10 o'clock, then how can I like at that time market is very volatile.
You will get the previous day's 1 hour candle.
Previous days 1 hour candle.
Right.
So any time frame, because previous day 1 hour like
You go to any time frame, that time frame's candle.
Okay. So you mean to say if I'm getting in the entry at 10 o'clock, so I should check the candle of last days 9 to 10 a.m. That's what you're trying to tell?
Yes.
Okay.
Okay.
But whether that will be applicable because
Why not applicable?
Because
what is the confusion? If you go to crude oil.
No, I'm talking about silver. Suppose in silver, today's
any commodity is same now. So suppose I am trading crude oil in 15-minute time frame, and I am looking, and if I am trading at, this is crude oil. Let me go to the MCX chart. So if I am trading at this point of time, which is a fresh day of the trade, I will look at previous 15 minutes candles ATR.
This is fine. This is fine. In case you are trading, say post 1 hour. If I'm starting in the morning, you said you should use last day's morning session. That's what you said. Correct me if I'm wrong.
If I am trading in silver here, so I will end up see. Any candle you enter, there is a previous candle. Please understand.
Yes.
Any candle, be it here, be it here, be it here, be it here. You will look at the previous candles ATR.
So there the question confusion is, suppose if I'm entering at 10 o'clock, so there'll be 1 hour, last 1 hour will be 9 to 10 hour, 9 to 10 a.m. Fine?
Okay.
So there the volatility is very high. So do you think that can be considered? This is my question. That's it.
Yes, you can consider.
Okay. So there the ATR should be considered, and then accordingly we can work it out. Huh?
Right.
Thank you.
Thank you. Next is Nishank Tandonji. Hi, Nishankji. Nishankji. Hi, Nishankji. So if there is a huge gap up and gap down, Vishal Nigamji, then you can consider these candles ATR only. Because if there is a huge gap up and gap down, because see, if you are entering here, so what will happen? Your ATR will go up if there is a huge gap up and gap down. So instead of applying this one, you can go previous day candle and take this ATR, because of the gap up and gap down, it has already gone up. So in case you are entering just 1 hour later, it will be difficult because there is a gap up and gap down. But if that is not a gap up and gap down like this, you can also take this candle's ATR. But if there is a huge gap up and gap down, instead of taking this one, you can take the previous day's last candle. That's it. Nishank Tandonji, yes?
Hello. Is my voice audible?
Yes, please.
Sir, can you just give us the setting again of the ATR in the trading view? I just want to check that.
ATR is a five period ATR, sir. You
Okay.
type ATR
Okay.
and
Average true range. Okay.
5 period ATR. Okay.
As simple as that. That's 5 ATR.
Yes.
And when we are looking at the ATR, we as we are doing this daily chart, so we are looking at the range on the daily charts. If we are taking any trade on the daily charts, then we
Right.
would be taking the ATR on the daily charts.
Right. If here in the hourly chart, we will take the ATR of the hourly chart.
Okay, and this ATR coupled with the super trend you were just teaching in the beginning of the class, it was that only that once the breakdown is. So I just didn't understand the concept of breakdown when we have to take the stop loss in this ATR.
When did you enter the class?
Sir, I entered 5 to 7